Hi everyone, I hope you are well rested, that you had a good day. Yesterday we had some technical issues regarding our Q&A, so I couldn't hear anything any one of you guys wanted to ask or say. And I really like my class to be interactive. It was horrible to give class yesterday and there was no questions. I couldn't see was I moving too fast? Was I moving too slowly? Did you guys understand? So hopefully you have some questions ready for me today, and then we can continue. Let's start with our productive session in accounting. So for those who have just joined, you are very, very welcome. My name is Shantae and I'll be teaching you some fixed assets in grade 12 accounting, okay? You guys are the big cats. When it comes to accounting, you have, I hope by this time you have a good basis in grade 10 accounting and grade 11 accounting. And I also teach grade 12 accounting. I teach grade 11 and 10. So you are in good hands. Just something you will know, what we'll be doing today is we will continue with our exercise. So for those who have just joined, don't worry, we'll still do the exact same exercise like we did yesterday. I'll just quickly recap on what we did so that you guys know exactly what we're going to do. But we'll do the exercise, the general journal. That's something you will most definitely maybe get in an exam, whether it's in the June exam or an assessment, depending on your school. The third term assessment, definitely something to look out for at the end of the year. A general journal it always gets tested when you go and study accounting as well. So I'm not sure what your future plans are. For those of you who just want to get your distinction, for those of you that just want to get accounting over and done with, or for those of you who actually want to go and study accounting. A general journal only gets tested, is the only method of testing in on university level, because it shows everything. It shows that you have a good understanding of every single general ledger account there possibly is. So I would suggest you testing yourself like that as well in a grade 12 setting, and in all types of topics, okay, so that you know exactly, doesn't matter which general ledgers you get asked, because you're not only going to have to do those, you actually have to know the whole treatment of, let's say, asset disposal you'll see today. Okay. Now, maybe we'll get time to move on to the note today. Maybe we'll do it tomorrow. But it depends on how fast we're moving, how slow we're moving, but we'll definitely do the notes. And then on Friday, I want to stand still and look at internal controls, okay? But we'll get to that when either tomorrow or on Friday. Just some admin. So all of you know that we've changed from Zoom to Microsoft Teams, okay? I want you then to invite all of your friends, and for you who haven't done it yet, please go to www.africateengeeks.co.za in order for you to register and subscribe so that we can email you the link to this class so you can meet me here at 5 to 6 every day for accounting. I would love to see you again. Okay, so for those of you who already registered, thank you so much. And for those of you who have friends or know who this can benefit as well, get them to register their email addresses on www.africateengeeks.co.za so that we can also send them a daily link to join us in our class. If you want to find us on social media, you are more than welcome to find us on Africa Teen Geeks. Okay, now that's done. I see we have no questions. So please feel free to ask any questions or just to say, hello, ma'am. Okay, let's quickly have a look at what we did yesterday. So what we did yesterday is I put up this this for you, please feel free to chat with me, just say hi or whatever. You are more than welcome. So with this exercise, we looked at it in order to do the fixed asset disposal, the note, and the depreciation. So yesterday, what we did is we worked out the depreciation, okay? I'm just going to read through the exercise that we familiarize ourselves with this question. So basically it just says that we have a financial year of 30 June. So I say to you guys, the first step you should do is to please write your year at the top. Okay, you'll see I'm a big fan of making notes. It doesn't look that way, but I'm going to tell you which notes you should be writing. Why I'm such a big fan of notes is because while you're reading your question, right, while you're reading through your question, you're making small notes so that when you actually start doing the question, you can just quickly go and see, okay, this is something, this is key, this is important. So that first you don't have to read through all of the information, because we know in accounting we don't have time, we only have limited time, so that you can identify the important key words, key things that I need to take into account. Okay, so now it says that we have to do the asset disposal in a general journal, and also the purchasing of a new vehicle. So that's what our focus will be today. Okay, our focus will be that today. And then we need to also make sure that we write off all the depreciation. So this will be our focus for today. Then they also ask me what is the amount that will appear as an expense for depreciation. Okay, this is the exact same thing that will appear in the note. So when we do the note, hi, Gary. It's so nice that you interact with me. Hello. Okay. So it's nice to see you again. Did you enjoy yesterday's lesson? Do you have any questions? Okay. So we'll do that when we do the note. So I'll address that. I'll address this 5.3.2 when we do the note, because the line item stays the same. The expense amount stays the same. Then we saw, okay, we are obviously doing vehicles because this is my fixed asset register. What we will be doing on Friday after we've done the note, or maybe tomorrow after we've done the note, we are going to look at internal controls in regards to asset registers and internal controls in respect to non-current assets. Okay, so now we see, okay, this is our information on 1 July 2017. So it's my information at the beginning of the year. At the beginning of the year, I had 3 vehicles. These are my 3 vehicles, okay? And what that means is that I have a cost price of each of these that was given to me the day bought. So now yesterday I told you guys, it is very important to know that I do not have to give you the depreciation or the accumulated depreciation amount. You know, if you have the date bought, if you have the cost price, and you have the method of depreciation, here we have it, as well as the rate, you can go and work it out yourselves. Okay, this is more matric level. Okay, so now we have 20% per annum, and we have on carrying value. What does on carrying value mean? We say to ourselves, on carrying value means it's the harder method. So I need to take all the previous years accumulated depreciation into account. Okay. Then it says, the following transactions took place. Then we saw yesterday, okay, so we had a vehicle that we sold on credit. Which one? The second one. So here again, I say to you, I would make a note to say, listen here, this is the problem. We sold it in September. Okay. What? Okay. We sold it during September. So I would make a note here and say, okay, the second one I sold in September. So what's that going to be? That obviously triggers a asset disposal, and that also triggers that my depreciation is going to stop on the 30th of September. Then on 1 December 2017, a new vehicle was bought on credit for 525. So then we see, okay, there was a new vehicle. So can you see there was an additional one? to these 3. Obviously, I disposed of that. So by the end of the year, I still have my 3. Okay. Now it says just provide for the depreciation. So let's go have a look. Okay, today I want to speak only about my asset disposal. So yesterday we spoke about the accounting treatment for all of these. Let's just go like that. Okay, so yesterday what we did is we looked at our treatment for everything, for this whole thing, and I discussed where we got the depreciation. We worked out the depreciation. I said, where did we get the accumulated depreciation? And I made sure that I then color coded it for you guys so that you know exactly, okay, what am I busy with? What is this color representing? So I hope that helped. Today we're going to focus on the asset disposal alone. So yesterday I said, when you have a debit balance in the asset disposal, when you have a balancing figure on the debit side, it will always result in a profit on disposal of an asset. Okay, that's supposed to be of an asset. So if I have a credit balancing figure, that will result in a loss on disposal of asset. Okay, so before I go on, now why I did this, they didn't ask me any of this, okay? What they asked me was the general journal. Okay, that's what they asked me to do. But I want to show you how it looks in the general journal, in the general ledger, and then how to account for it in the general journal. Okay, so let's start. We said that we had a asset. I don't know if I can, let's do this. Okay, we said we had an asset that we disposed of 570 Rand. Maybe I can make this bigger. Okay, yes. Okay, there I get my workflow up a bit. So we have an asset of 500 that we bought for 570,000 Rand on the 31st of May, and then I sold it on credit for 420,000 Rand. So my first step then would be to say, okay, what I'm going to do, step number one is, can you see here? Step number one is then to basically take out all of your vehicles. Oh, this vehicle, not all of your vehicles, take out this vehicle of 570,000 Rand, and then you're going to take it to asset disposal. This makes sense because can you see that my vehicles, which is my asset, is going to decrease, right? It's decreasing, so that's why I'm crediting it. Okay, I'm going very slowly, so I hope you understand. I'm crediting my vehicle account because I'm decreasing it, because I'm selling it. Okay, so obviously you guys know by this time that we have, for every credit we have a debit, and for every debit we have a credit. Okay, so what does this mean? I'm now going to debit my vehicles in my asset disposal account. So here we have it. Okay, my second step is then to make, okay, so now we've done that. Now I want to go to my general journal. Can you see that this is my first step? The general journal actually shows everything. So in grade 9 and grade 10, you learned that cash receipts and cash payments gets written in the CRJ, the CPJ. But guys, we are matric now. We don't do that anymore. We can only solely work with general journals because you can actually, in practice today, you don't really have a cash receipts journal anymore, and you don't really use a cash payment journal. If you get Sage Pay, you get Sage and Pastel, you get all of these. We now have Sage One, which is an online system that does the bookkeeping for us. We don't actually use this journal anymore, but we do use a general journal. So if you do go and study accounting and you want to be an auditor, and I go adjusting journals, all I do is I just work with my general journal, because a general journal shows all of the transactions. Okay, so in order to do that, all you do now is you go and say, okay, what account did I debit? Can you see that I debited the asset disposal account with my cost price? Okay, what did I credit? I credited my, can I see a little nice spell mistake there again? So what did I credit? I credited my vehicles account. So can you see this is how you're doing a general journal? You telling me, okay, ma'am, what I did is I then debited my asset disposal account. Okay, ma'am, I credited my asset disposal account to take out the vehicles of what value? Of the cost price of the 570,000 Rand. Okay, that's super important. Then my second step would be to account for the depreciation. Okay, the depreciation for what? For the year. Okay, don't know if I to get it. Okay, so this is my second step. Oops, back. Da, da, da. There we go. Okay, this is my second step. So if we go to my depreciation, in my accumulated depreciation amount, there, my balance. Can you see, look at it's orange. Can you see that I've only accounted for these two? So I've only accounted for 1 to 1, 600, right? So what do I need to still do? I need to still account for the depreciation from the beginning of the year up until the date that I sold it. How in the world are you going to ever remember to do this? Okay, here's the method, or here's the reason. Depreciation always only gets calculated at the end of the year. Okay, that's something you should know. Depreciation only gets accounted for at the end of the year. So at the end of the year, I take my fixed asset register when I'm in practice and I work out, okay, this is my method, and I update my fixed asset register with depreciation. I go write my general journals, and there we go. So if this asset is now sold on the 30th of September, can you see that I have to write it then because I'm still not at year end. I'm still before year end. Okay, my year end is 28 February 30. My year end is 30 June 2018. I'm so used to having a normal financial year end. So here in this question, my financial year end is 30 June 2018. So can you see that I sold it before that? And therefore I need to remember to account for all the months, which is this 3 months, that I still had the asset in my current year. Okay, because if I only do it at the end of the year, can you see that I'll forget and that it won't be, I won't de-recognize the asset at its actual carrying value. Okay, so how do I do that? Okay, we worked it out yesterday. We said, okay, the amount is 22,420 Rand. Okay, I just do a normal depreciation entry. I'm going to debit my depreciation. Why? Because it's an expense. Okay, expense obviously increases on the debit side. Okay, we said accumulated depreciation is a negative asset, remember, because why? This has to be shown at cost price. So this is decreasing my value to show my actual value of the asset. Okay, just want to see if I'm going too slowly, going too fast. Nope, nothing. Great. So now, what we're going to do is we're going to show on in the general journal, okay, ma'am, I did the following. I debited, can you see, I debited the amount, the depreciation account, okay, ma'am, and I credited the depreciation accounts. Okay, so that is what we're going to show. We're going to say, okay, can you see I credited the accumulated depreciation amount? Another form, you have to then make a little space. Can you see all of these have spaces? If you do not make a space, like here, can you see? Now, you have to say, okay, debit. Okay, then obviously this is going to change because I don't make credit. Okay, so that's just a way of writing it. I obviously can see what you guys are debiting and crediting, but it is a form to see, okay, because in the matric year end exam, okay, in your matric year end, I'm not going to have time to look at what is this? Is this now debit or debit or credit? I'm going to give you a mark here and I'm going to give you marks for this, okay? Yes, us as teachers during the year are lenient. We know you. When we mark your answers, you are just a number, okay? We don't have time because we're marking tens of thousands of papers. So make it easy for your marker to know exactly what do you mean. Make it mark friendly. That's going to earn you more marks, okay? So we're going to show what we're going to debit, and then we're going to make space, 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 and then we're going to write there what we're going to credit. If you don't want to do that, just remember to write here debit, credit. So I know as a marker, okay, what did you debit, what did you credit if I have a quick scan at this. Okay, now we've done the second step. Okay, we've accounted for the depreciation up until the date of 30 September 2017 when I sold the assets. Okay. Next up, we're going to see, okay, third step. So now I've done this, correct? Okay, and I've done this, correct? Okay, third step. Now, because I took out the vehicle's cost price in my vehicles account, can you see that my third step will then be, this is my third step. Can you see my third step will then be to take out all of the accumulated depreciation that pertained to this asset. Now, why am I taking out 144,020? Why am I doing that? And not just the 22,420 that I've accounted for now. It's because this has to do with all the previous years that I actually had the asset. Have a look. Why is this? Okay, let's just see. Yes. Okay, we're still on the right track. Okay, because can you see that these three added together is the 144,020? I got myself confused there for a second. Don't know why. Okay, so it is important to know that I need to take out this whole 144,020. That means that it's my depreciation for my current year as well as all the previous year's depreciation. Okay, all of these previous year's depreciation. Can you see that those two added together is the 144,020? Okay, that's important. This is something else. Okay. This is something else. So don't look at that. It's just, this is the depreciation of at the beginning of the year for the 3 months. And then has to do with my new asset, but I'm not going to talk about that now. What I do want to show you is why I'm de-recognizing this. Okay. Because I'm de-recognizing this, I have to then credit the accumulated depreciation. Let's just quickly revise. Why did I get that? Can you see I'm taking out all of the depreciation of this asset? All of the depreciation of the asset I'm taking out. I'm taking out all the previous year's depreciation, which is the balance at the beginning of the year, as well as for the 3 months I had the asset. Okay. How do I show that in my general journal? Okay. Let's see. You're going to show me, ma'am, I debited my accumulated depreciation. Debit always stands first. Okay, it's always written first. Okay, so you're going to say, ma'am, what I did is I debited my accumulated depreciation account. With what amount? With the 144,020. Okay, ma'am, then what I did is I went and I said, okay, I'm going to credit my asset disposal account with what amount? I credited my asset disposal account with 144,020. Okay, so in your test, you won't have time to do this. But if you really can't make sense, always, always, always write a T account. For all my students, it doesn't matter whether you are starting out in grade or 9 with accounting or whether you're moving over to matric, I always try and tell the kids to write T accounts. It really helps just to quickly figure out, okay, what am I supposed to debit? What am I supposed to credit? Okay, this is how it's going to look. Okay, so this is the accounts you are debiting and crediting. Okay, not the description in the physical account, because then you're going to get it right. Wrong. I want to see what account you actually debited and credited. Okay, So then we've done this, right? So we've done that, we've done that, we've done that. Okay, let's now see. Let's quickly recap. Just take a breath and recap. What did we do? We took out the vehicle of 570,000 Rand. Then what did we do? We wrote the depreciation for the 3 months. I still had it in the beginning of the year because why? If I took out the accumulated depreciation as is without taking the depreciation into account for these 3 months, what does that mean? That means that I'm going to calculate my carrying value at the wrong amount. Okay, so I have to then account for my depreciation because I still used the asset from 1 July up until September when I sold it. Okay, then my next step would be to account for the depreciation, take out all the accumulated depreciation. Now, what I want you to see is basically if you did that, if you did step 1 to step 3, you will see that this is the carrying value. Okay. This is the carrying value. So what did I do here? I said, okay, it is the cost price minus the accumulated depreciation amount. So it is the actual value, the carrying value, okay, of the asset. So that's the value. That's to determine, okay, this is the value of the asset. Now, what happens is they say to me, let's go to the question. They told me, listen here, you sold this vehicle on the 30th of September for an amount of 420,000 Rand on credit. Okay, so what's important here? You sold it on credit and you sold it for 420,000 Rand. Okay, so here's how you determine, okay, is it a profit or is it a loss? When you sell something at a value of less than what it's worth, see, this is what I sold it for. This was my selling price. Okay, this is my selling price. Can you see it? Okay, this is my selling price. So can you see that this is the actual value of the assets, but then I sold it for less. Can you see that it makes sense that we have a loss on the disposal of the asset? Does that make sense? I hope it does. Okay, now to say debtors control, because I'm selling it on credit, they are still owing me the money. Okay, that's why debtors control is an asset. That's how you determine what's an asset and what's a liability. An asset, they still owe me the money. I will still be getting the 420,000 Rand. Okay, so that's how you determine, okay, there's a loss. Why? Because I took my carrying value, there's my carrying value, and I compared it to what it was sold for. Yes, it was sold for less than the actual value. So obviously I'm making a loss. How does this look in these two figures look in my general ledger? You are going to tell me, ma'am, first of all, I'm going to debit my creditors control. Why? Because I'm increasing my debtors control with the amount of 420,000 Rand, right? Then I'm going to credit my asset disposal account because now I'm telling the books, listen here, I sold this asset for 420,000 Rand. Okay. The next step then is to account for my loss of disposal of assets and asset disposal account. Can you see that this is an expense account? So can you see that in an expense always gets debited? Always. It's something you should know by now. Okay, so an expense always gets increased in my debit side. So therefore I say, ma'am, what I did is I debited the loss on disposal of the assets account. Ma'am, what I did here is I credited the asset disposal account. Can you see? Therefore, I credited with what amount? With the selling price, right? Let me just have a sip of water. Right. Now, because I did this, then that results in me having either a loss or a asset disposal. Now, I think I quickly spoke to early because I did the asset, the loss, and I did the asset, and then I went back to the debtors. I'm sorry about that. I just want to show you that you also then have to show the amounts. Okay. Now, the next thing they ask me, if I go back to the question, it says, you have to account for the asset disposal. I already did that. Check. Now I need to also account for the purchasing of the new vehicle. Okay. Ding, 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 flag. Need to do something. On 1 December 2017, a new vehicle was bought on credit for 2,525 000, 525,000 Rand. I bought the new vehicle. That's what they want me to do next. How do I do that? Okay, let's see, any questions? Okay, depreciation for the current year, or is there none? Okay, we've now seen that is our depreciation for the current year. De-recognizing, what does that mean? That means that we're taking out the asset of from the books. Okay, so I'm taking out the asset of from the books. Where is the depreciation for the year recorded? It's recorded in my depreciation account as well as my accumulated depreciation amount accounts. Okay, so let's go back. Now, we said that this would be 2017. We bought a new asset. Now, remember, I told you guys, okay, you don't show me the space, so you have to show me debit and you have to show me credit. Right. Vehicles. This is other way around. I now went too fast. Okay. Credit. Can you see that I made it my own mistake? Can you see that, guys? Why did I do that? Confuse you? No, I confused myself. So when I'm buying a new asset, what am I doing? I'm debiting vehicles, okay? Here's a perfect example. I actually made a good mistake. A perfect example is if you did this. Can you see that if you didn't do this, I'm going to give you wrong marks because I'm going to assume that the creditors control you debited and the vehicles you credited. I'm not going to take some time to just look here. I'm going to assume that, can you see you've done everything correctly up until now? Why would you write the credit first? The debit always gets written first. If you don't write it first, that's perfectly fine, but indicate it to me. Indicate it to me. So I need you then to say, okay, what did I debit? I debited vehicles with what amount? With the, let's go back. With what? With the actual cost price, okay? And I bought it on credits, another key feature. Credits need to trigger and the price, right? Great. Now we've done that. So we bought it on credit. So can you see my liability is going to increase? My creditor control is going to increase. What does that mean? That means that my 525,000 is going to be written in my credit side. Okay, so now I've accounted for that. Let's go back to the question. Okay, purchase of new vehicle, I need to obviously account for in my general journal. Check. Okay, I've done my asset disposal, check. I've done my purchase for new vehicles, check. Now it says, and the writing off the depreciation on the last day of the year. What did I tell you? You always write it at the last year. Okay, pleasure. Okay, so now we have the depreciation amount. This depreciation amount has to do with my new vehicle. So they only want me to write the depreciation for the new vehicle. Okay, you with me? You guys understand? So I bought it on 1 December, again, 2017. And then I had it for 7 months because quickly count with me. It's December, January, February, March, April, May, June. 7 months. Okay, so I'm going to account for that. How do I account for it? Have a look here. I'm going to say, ma'am, what I did is I debited my depreciation with what amount? The 61,250. Okay, then I credited my accumulated depreciation like I normally would if I account for my depreciation. It is going to be credited. So there I have done my general journal. Is there any questions? Do you want me to move on to the note? Do you want me to do it tomorrow? Maybe I should just quickly do it today, then it's done. We still have 10 minutes. Okay, Gary, how are you doing? Okay, let's quickly see if we can move to the fixed assets. Okay, the note. Okay, in 7 minutes. Let's see if we can do it. I'm not going to rush it. We can do it tomorrow as well. We can recap tomorrow, but let's start. So we have our fixed asset note. Now, guys, you need to study this. This is something you study off by heart. This is something that comes in that little bookie I told you about you need to have. Why? Because this is something you're going to go through just before the test or the night before the test. Okay, you have to know this because this is going to bring you marks. So now we have cost at the beginning of the year. This, can you see, is the same amount as this. This is where my color coding comes in. I'm very proud of my color coding. Okay, how did I get that? This is my 3 assets added together at the beginning of the year. Remember I said to you, in the beginning of the year, I had these assets, okay? So I'm going to show, this is my balance. Can you see this, how the balances links with the note? This is why I wrote it here. So this is how it links, okay? Can you see it's the same? My accumulated depreciation is my orange amount. So it's these, right? Together with these and this one. Okay, can you see that that's how I get my amount? So we have my accumulated depreciation amount of 257,400. Okay, to have a look again, can you see that it's my balance? It's my balance at the beginning of the year. Okay, then I have my carrying value at the beginning of the year. That's just a normal sum. So I say, what is my cost price minus my accumulated depreciation? That gives my carrying value. Okay, shop. Now, my depreciation for the year is the amount that I've written here in my accumulated, in my depreciation account. Can you see it's all of these also added together? 17510, right? So I have to show that I'm going to minus it. Okay, I'm going to minus it. Then I'm going to account for it here. Okay, remember it's also this question. It says account for what would the expense appear for depreciation in my statement of income. It would be this amount, 172,510, and it's all my depreciation that I've written off during the year for all the assets that I have. That's important. So that's why there's that green one. It gets taken into account there. It's from here or then from all of these assets that I had, including my new vehicle. Okay, good. Right, let's move on. Now I have to see my additions at cost price. Now we have 5 minutes left, okay? And what I want you to notice is, how are you going to remember? Is it additions at cost or additions at carrying value? Okay, when you look at your vehicles account in your general ledger, see this is also my vehicles account, okay? It's always at cost price. So my historic cost principle, another principle you should remember, my historic cost principle tells me, listen here, you always have to show your non-current assets as based on the cost price, on the value, the historic value that you bought it for, right? So additions has to be at cost. Why? Because we are following the historic cost principle. We have to show in our accounting books, we have to show that it is at the value that I bought it for. So therefore, the 525, right? Here you can see the nice little purple that I brought in. Okay, so that's how you're going to know that it is at cost. Remember, your vehicle that you buy, you always do it at cost by debiting your vehicle's account. Your vehicle's account is always at cost price. I hope you have that now. Okay, now let's look at disposals at carrying value. Why and how in the world are you going to remember it's disposals at carrying value? And I'm saying this and I'm repeating it because I remember when I was still in school and when I studied at varsity, I couldn't remember now which one is at cost again and which one is at carrying value. And it makes so much more sense and you remember it when you actually physically understand the concept. So you guys know that when I dispose of an asset, I have to work out the carrying value. Okay, like we did here, we worked out the carrying value. Can you see? By de-recognizing the vehicle and then de-recognizing the asset, the accumulated depreciation, we actually worked out the carrying value. And so you need to know that we are disposing of an asset at the carrying value, at the value it's actually worth. And then comparing it to the selling price in order to work out a profit or a loss. So here you are disposing of it. Remember the minus, that's very important. Sometimes you guys forget that. Then you are going to de-recognize it, okay? So here I showed you these two together will give you the carrying value. Okay, here's also another method. Wow, I showed you how you guys are making a loss. You're comparing the carrying value to the selling price, and therefore that's the loss. Okay, now another thing. You now have the cost at the end of the year. We have 3 minutes left. Okay, we have 3 minutes left. So in order to do this, okay, obviously you guys know that it is the balance in my general ledger, and I also drew this and I did this whole thing for you. They didn't ask it, but so you can see where they got the figures and that the figures actually make sense, because if I take the balance and I take out my asset disposal and I take into account my new vehicle, that's how I'm going to get the balance, and that's exactly how you are getting the cost at the beginning of the year. So you're taking the opening balance, you're adding the additions, but then I need you to remember to please, please, please take out the asset that you sold, okay? This is very important. So yes, you can do it exactly like this and you don't have to draw a T account, but then you have to keep in mind that in this disposal at carrying value, you also have to take out the cost price of the amount that I sold. Okay, last little bit for today. Then you can go have a breather until tomorrow. We look at my accumulated depreciation at the end of the year. So here I worked it out again. So we have our balance, then we de-recognized. So we took out all of my asset, we took out the accumulated depreciation for the asset that I disposed of, and I accounted for all of my depreciation during the year. So that gives me a balancing figure. That would be my opening balance for the next year. And that corresponds to this balance. But if you don't want to do this T account and you only want to do the notes, how in the world are you going to know what to do, what to add or subtract here in order for you to know to get to this answer? Okay, here's the answer. I'm going to take my accumulated depreciation amount at the beginning of the year. I'm going to then add my depreciation because it's increasing my depreciation, can you see? And I'm going to subtract all of the depreciation that I'm taking out of the asset that I disposed of. So have a look here. Let's go to the top. All of these three amounts, can you see? These three amounts has to do with the asset that I sold. So I'm going to take out everything, all the depreciation pertaining to this asset, okay, to the asset that I sold. So I'm going to then get a balance of 285890. When you work that out, you are going to get a carrying value at the end of the year for all your assets of 819110. Okay, so is there any questions? You have done extremely well. I'm proud of you. And then that concludes the lesson for today. Well done, everyone.